Home sales in the GTA in October continued its downward trend, taking shape over the last few months, despite sales down by nearly half of where they were in October of 2021.
But are we nearing a bottoming out in the housing market? That's the question a lot of people are wondering. Jason Mercer is the Chief Market Analyst for the Toronto Regional Real Estate Board. Joins us live this morning to talk more about this. Jason, 2021, even 2020, they were kind of a couple of out of the ordinary years, certainly for real estate here. Are we just coming back to earth, or is this a sign that maybe there's a more significant shift happening in the market?
Well, we've definitely seen sales down in comparison to last year's record numbers, and a lot of that has to do with the fact that people are coming to terms with much higher borrowing costs in the market. But it's interesting, as we move through the fall, we've seen a bit of support for price, and that's because new listings still remain very low from an historic perspective. And so while there's fewer buyers in the marketplace today, you're still seeing quite a bit of competition in some neighborhoods throughout the GTA. And so as a result, it looks like after a downward trend in pricing through the spring and the summer, we've now found some support close to $1.1 million.
And let's go back to that $1.1 million as the average cost of a home in the GTA. Do you ever see that number going below $1 million?
I certainly think when you look at where mortgage payments are right now, if you take a look at what people were paying at the price peak back in February compared to what we're paying right now, it's quite similar. It's a little bit higher, and I think that's what we've seen happen. Is we've seen home prices decline to mitigate the impact of higher borrowing costs. Now that we're seeing those borrowing costs a lot more similar, again, that may provide some support for pricing at around that 1.1 million mark.
And Jason, what was the sign or signal you took from Tiff Macklem from the Bank of Canada last week with that 50 basis point increase at the key rate versus a 75 basis point increase?
Well, I think that, and plus the notion that they acknowledge that rate hikes may be coming closer to an end, and how we saw bond markets react. I mean, that suggests that we could see rates remain closer to where they are today as we move forward, especially on sort of the medium-term rates, like the 5-year fixed bond and mortgage rate, which so many home buyers still take advantage of today.
And Jason, we recently reported about condo sales kind of taking a hit. Can you talk to us about that area? What's going on there?
Yeah, well, it's interesting because if you look at where the sort of tightest segments of the market are, we've seen sales down across all market segments, but we haven't seen the same sort of trends play out equally on the listings front, and we're still seeing tighter market conditions for, say, condominium apartments and also mid-density housing like townhomes and semi-detached. And so, those segments of the market have held up a little bit better than, say, the more expensive detached side of things over the last few months.
All right. Lots to watch for still. Jason Mercer, Chief Market Analyst for the Toronto Regional Real Estate Board. Thanks for your time.
Thanks, Jason.
Thanks very much.